Well, good morning, everyone, and welcome to Equip Super's annual member meeting for the 2022 financial year. I'm delighted to be here with you. It's so good that you've gathered with us for this morning's session. My name is Danny Casey, and I'm the chair of the Equip Super board. And joining me today is our Chief Executive Officer, Scott Cameron, and our Chief Investment Officer, Andrew Howard. Delighted to have them with us as we talk through this session and answer the questions that you've sent for us. We also have other board members and executives attending today's meeting. So on behalf of the whole Equip team, I'd like to thank everyone who's taken the time to join us today. We've certainly been looking forward to this morning's session. I can confirm that we have a quorum of directors as well as our auditor and actuaries present. So as such, it's fine to officially declare the annual member meeting open. It is important just at the start that we note that the information we discuss today will be general in nature. So it relates to the fund as a whole. It can't and doesn't take into account your personal circumstances, such as your individual investments or your financial objectives. So if you'd like financial advice, individual financial advice, well, we certainly have financial planners who'd be delighted to assist you. Their contact numbers are included at the end of this presentation. But I'd like to begin by acknowledging the traditional owners of the land from which I'm chairing this meeting today, the Wurundjeri people of the Kulin Nation. I pay my respects to their elders, past, present, and emerging, and the First Nation elders of other communities who may be joining us today and all around Australia. In today's meeting, I'll be making some opening remarks on behalf of the board. Then ask Scott to present on behalf of the executive team, and we'll follow that with an update from Andrew, who'll cover our investment performance for the financial year 2022, the investment outlook, and what that means for you and for our fund overall. We'll then have some time to answer questions from you, our members. We've received quite a number of questions prior to the meeting, and it's really encouraging to see such a strong level of interest and engagement, and we certainly enjoy the chance to interact with you around that. But you can also ask questions during this meeting by using the Ask a Question function, which is just at the top right of your screen. If you have a look there now, you'll be able to see that there. So if you have a question, put that in. But if you're asking it today, of course, just a reminder again, we can only ask general questions about the fund. If it's about your specific circumstances, your personal account, then please call our helpline, and our contact numbers for that will be listed at the end of the presentation. So we may not have time to answer every question we've received today, but written responses to each question. And the minutes of this meeting will be available online at equipsuper.com.au/AMM, and we'll have that available by no later than early April. So I'd now like to introduce our current board members who are shown on the screen there. The past financial year from 2021 to 2022, we've had 9 people serve on our board, and all of our board members bring vast experience, technical skills, and a strong commitment to our values. The board has 3 employer representatives and 3 member representatives and 3 independent directors. And as mandated, the chair is a board-appointed independent director. The mix allows flexibility to attract and select high-caliber people who, as a minimum, meet all the standards required by legislation, but they bring a passion for the values and a passion to serve you, our membership base. So together, our board, management, and the dedicated team maintain a razor-sharp focus on delivery of the best retirement outcomes possible for you, our members. Since Equip Super's inception in 1931, we've been helping Australians grow their super and plan for their future for more than 90 years. Yeah, our purpose is very clear. It's to support our members to prepare for and enjoy financial freedom in retirement. Now, while we've grown considerably over those last 90 years, our commitment to members' long-term financial security has always defined us as a fund. It's the bedrock that enables us to face the future with confidence and a real sense of purpose. We've also always stayed true to our guiding values. We quote them at the beginning of every meeting. We put members first. We do what we say we will do. We collaborate and innovate, and we celebrate success. So today, the trustee manages several leading brands and has over $30 billion in funds under management. We provide super and pensions to more than 140,000 members across the country, and we also offer financial advice. Our members provide essential services in manufacturing, mining, utilities, and the auto industry, just to name a few. And our driving purpose is to support our valued members while you're serving others. We're actually looking to help improve your retirement outcomes. In the 2022 financial year, we focused on providing members with excellence in super, delivered with care. And as we look back over the year, it's very clear we continue to pursue the strategy of further growth, as we believe that will position us to deliver even better outcomes for you, our members, in the future. So during the year, Equip Super completed the successor fund transfer of BOC Super, which resulted in a $774 million increase in funds under management. And more importantly than that, we welcomed 2,800 new members to the fund. It's great to have you with us. Whenever we assess growth opportunities such as these, it's always through the fundamental lens of maximising retirement outcomes for our members. Corporate super and managing large corporate plans, including complex defined benefit plans for employers, is ingrained in our DNA. It's what we do and what we do well. We welcome BOC Limited providing transfer information sessions, welcome calls and emails to help our newest employers and members. It's all part of what we do to help make sure the transition to Equip Super is as seamless as possible. And once again, we certainly give a very warm welcome to our new members from BOC. Another achievement we're really proud of, and which continues Equip Super's history of outstanding value within the industry, is the fact that Super Ratings, that's a leading independent rating agency for the superannuation industry, has awarded Equip Super their highest platinum performance rating as best value for money fund 15 years in a row. And that's for our super and our pension products. Super Ratings also named Equip Super as a finalist in the My Super of the Year and My Choice Super of the Year, as well as the Momentum Awards in 2022, as a fund that demonstrated significant progress in executing projects that will enhance our strategic positioning in the coming years to benefit you, our members. Equip Super also received a 5 apples rating from Chant West for 2022. As the highest quality rating a fund can get from Chant West, it goes without saying just how proud we are of this achievement, which we do on your behalf. For the 2023 financial year, we will continue to focus on what we've always done well: excellent governance, aiming for strong long-term investment performance, and the best possible service and financial advice for you, our members. So with those introductory remarks behind me, I'd like to hand the discussion now over to our Chief Executive Officer, Scott Cameron, who'll discuss the fund's achievements in the financial year to 2022 and our future plans in a bit more detail. So thank you very much, Scott, for sharing your insights with us.
Well, thanks for the introduction, Danny, and also good morning to all of our members joining us today. We certainly appreciate your ongoing support. Over the 2022 financial year, the fund focused on a program of simplification, consolidation and improving our investment returns. And while there were positive changes in 2021 and 22, Equip Super, like most Australian super funds, experienced the negative impacts of COVID, and we saw inflation rise to its highest level in 30 years and witnessed the impact of geopolitical volatility on our investment markets. And all of these factors influenced our one-year investment returns for Equip Super members, and just like it impacted the members of all other super funds across Australia. Under the difficult conditions, we saw our first negative financial year return for our balanced growth investment options in many years. However, through the dedication and expertise of our investment team, we do continue to deliver strong long-term performance for our members. We should remember that while we did have returns that were negative in 2022, they did follow very strong returns the financial year before. And importantly, the returns have been mostly robust since the financial crisis back in 2008 and 2009. And also importantly, Equip Super's balanced growth investment option achieved a strong average return of 8.4% per annum over the 10 years leading up to the 30th of June 2022. Over 2021 and 22, there were several significant developments at the fund, and I'd like to take the opportunity to talk to you about some of those today. During the year, we moved our insurance arrangements to MetLife. We believe that appointment will add significant value to you as members. The appointment came after a really extensive process that our team undertook, and that process took around 18 months, where we assessed the leading group life insurers in the Australian market. And prior to the appointment of MetLife, the fund had 3 separate insurers, and so the move to MetLife has allowed us to simplify and harmonise our operations. And we're really confident that it will continue to deliver improvements to you, our members, over time. From the 1st of July 2022, we reduced our administration fee for pension members. As a profit to member fund, it's important that we continue to deliver products and services that meet your needs and adequately equip you for the next chapter in your life, which is why we always try to keep our administration fees as low as possible. We also closed the property investment option with the aim of simplifying our operations to drive down costs and also to remove complexity. At Equip, we're a true partner to our employers. We do see that as a real point of difference. We equip them with specialist skills and customised solutions to support and improve their employees' retirement outcomes. We believe in helping employers demonstrate that they care about their employees, in doing so aiding workforce retention, which is really important to them. We also have a proud history of supporting defined benefits arrangements, tailored corporate insurance, generous employer-provided super entitlements, and other benefits for employers and their employees. Our approach is one of the things that sets us apart from many of our peers in the industry super fund sector. As part of that, we visited sites as far and wide as Parapadu in WA and Weipa in Queensland, as well as many capital cities around Australia and major regional cities as well. And that we assist members in person, conveniently at their workplace. Again, a real point of difference that we offer our members and our employers. Digital services will remain an important part of how we assist employers and members. You can choose the most convenient means for you, whether that be face-to-face, on the phone, or indeed online. Our employers continue to receive regular tailored communications via email. These bulletins help employers stay up to date with and meet their super obligations, while also providing information they can pass on to staff. Topics include legislative changes, benefits improvements, investment returns and outlooks, insights from research, and much, much more. I wanted to now take some time to just update you on some other industry developments and the future of our fund. Throughout the year, we responded to major regulatory changes, including the stapling obligations through the Your Future, Your Super reforms. As the new legislation required employers to look up and contribute to the existing super fund of any new employees who hadn't chosen a fund, our employers were equipped with resources and information that allowed them to adapt their processes and get great outcomes for their new starters as part of the onboarding process. The federal government has also recently introduced the Retirement Income Covenant, and that's an important measure designed to focus the superannuation industry on improving outcomes for members who are approaching or indeed already in the retirement phase. Under the covenant, super funds are required to create a retirement income strategy, otherwise known as a RIS, and you can find our retirement income strategy on our website. In creating the RIS for Equip Super, we aim to achieve a balance between the legislative objectives and the needs of our soon-to-be retiring and already retired members. We regularly seek feedback from our members on a variety of topics, and we knew that this new retirement initiative needed to be led by you, our members, and what you want and what you need in retirement. Our members asked us to explain what happens to their super when they retire. And you told us you want access to one-on-one advice and support. And importantly, that retirement is just the beginning of the next stage in your lives. We've always contacted our members who are transitioning to retirement. However, due to the feedback received, we're stepping things up. we now reach out to members via a combination of mail, email, and phone calls to ensure you have access to accurate and tailored information. The next 6 months will see our fund deliver significant improvements for members who are thinking about or already in retirement. So keep an eye out for our new website, which will have improved investment reporting, updated pension content, and personalised information. And this will be available in July of this year. We're also making improvement to our forms. This will make it much easier for you to complete forms and access tools online. And we have a new program designed and dedicated to service members during the period of their lives, the retirement phase. And we're calling that the next chapter, and it will be launched in the coming months. So please keep an eye out for that. And of course, the website refresh and the upgrade of our online forms and tools will aim to benefit our members. And it's really a turning point for the fund and our service offering. This continued focus on digital services opens up more channels for you, so you can choose how you wish to interact with us and your super balance. In an increasingly competitive and consolidating market, building brand awareness amongst the Australian public will play a key role in ensuring Equip is top of mind for both prospective members and employers to build our fund. The future of the fund relies on growth, and we will be delivering strategic and targeted brand activity to drive member and employer awareness, acquisition, and retention. We'll also be deploying an action plan to improve employee engagement and to support employee retention. Our employees remain an extremely valuable part of our fund. And finally, I know what's important to members, it's returns. And ultimately, that is how much money is in your super balance. One of the things we're focusing on this year in 2023 is a strategic initiative called One Fund. One Fund will deliver further consolidation and improvements. It will deliver fee reductions for most members, as well as a single set of fees, a single MySuper default product, and a single investment choice menu. The ultimate goal is to improve members' retirement outcomes, and we will communicate with you about One Fund in the coming months. We look forward to sharing more details about these initiatives and to the continued success we anticipate over the next financial year. And as I mentioned before, our employees are an extremely important part of Equip. So I would like to take the opportunity to thank them, a dedicated team, but also you, our members, particularly for the tireless efforts and for your support during the pandemic, which was an extremely difficult time for all. We certainly do appreciate your efforts. And so with that, I'd like to hand over to Andrew Howard. Andrew is our Chief Investment Officer, and Andrew will take us through the performance through 2022, but also the investment outlook.
Great. Thank you, Scott, and good morning, everyone. I'd just like to add my welcome and thank you for being with us today. Certainly on the investment front, there is a lot to share with you. It's fair to say it's probably an understatement that the investment environment is very different to when I last presented to you in late 2021. But more on the year that was in a moment. I think firstly, it's really important that we just take a step back and just remind ourselves of some of the key principles that feed into our investment strategy. And really the investment strategy is designed and really leverages off our investment beliefs. And I think in the market environment that we have experienced, those investment beliefs have never been more important. So things like diversification, which I'll touch more on in a moment, investing for the long term, thinking about taking advantage of opportunities in markets as they arise. So these things are critical when we think about how we actually manage your money. And I think really when we think about the challenging market environment that we have experienced, it's really critical that we ensure that we avoid reacting at the worst possible time. So firstly, one of the key tools we have in the investment toolkit, and that's very much around diversification. And really what we're trying to do in terms of the investment strategy is we're focused on generating returns from the widest range of investments as possible. And for us, diversification is not only across asset classes, but it's also within asset classes as well. And when we think about really the period, the investment period that we've had really sort of dating back to the end of the global financial crisis in 2009, it was really easy to get lulled into really what was a false sense of security when we think about the record low interest rates that we've had for such a long period of time, which has very much been a tailwind for equity markets. But as I mentioned at the outset, we are in a very different market environment today. And I think if there's one illustration that we can share with you that really sort of highlights how things have changed over the last year, it's this. And what we're seeing here is what has been one of the steepest increases ever in official cash rates. And what we're looking at here is the move in official cash rates of the US and Australia. And as I say, we've never actually seen this before. If we wind the clock back to the beginning of 2022, we effectively had interest rates at zero. And certainly in Australia, the RBA's official cash rate was just 0.1%. And of course, we only have to go back to literally yesterday when the RBA announced yet another interest rate rise of 25 basis points, which is the 10th meeting in a row, the 10th month in a row since May of last year, that they have raised rates. So today, the official rate in Australia is 3.6%. If we look actually at what's transpired in the US, it's even higher than that. And so the official rate in the US today, and they have a range over there, is 4.5 to 4.75%. This theme is not something that's only unique to what we've seen in Australia and the US. This has been a theme that we've seen across developed nations all around the world over the course of the last year. If there's one explanation for that, it's inflation. If we think back to the start of the onset of COVID in February, March of 2020, there was a huge concern that we would see the global economy fall very quickly into a recession. And as a result, we saw record monetary and fiscal stimulus as central banks and governments all around the world tried to ensure that they effectively did everything they could to avoid their nations and the global economy falling into a recession. But if there's one thing that makes central banks, such as the Reserve Bank of Australia and the US Federal Reserve, nervous, it's inflation. So I think it's fair to say that the stimulus measures that were undertaken back in 2020 certainly worked. We avoided a recession over that time, but it has resulted in a very sharp increase in inflation. And we need to remember that the only lever that central banks can actually use to control inflation is the official cash rate. And the best way to think about this is that the intent is that higher rates will lead to a slowdown in the economy as a result of reduced spending because we basically have less money to spend, and that leads to inflation falling. It was, I think, particularly in the US, the alarm bells started ringing in early 2022 when the US inflation number hit 8.5% in March of last year, and that was a 40-year high. Also, closer to home here, we need to remember that the RBA has an inflation target. It's a range of 2 to 3%. Currently, inflation in Australia is running well north of 7%. So we are a long way from where we need or central banks want to see inflation at. And the impact on investment markets over the course of this period has been dramatic. We have seen sharp falls in both equity and bond markets all around the world. Markets do not like uncertainty, and that is something that we have been living with now constantly for over the last 12 months. And the key question really from an investor perspective is how high do rates have to go to bring inflation under control? And I think there was certainly increasing concerns when the US Federal Reserve, the chairman, Jerome Powell, came out during the course of the second half of last year and said that they're going to bring inflation back to targeted levels at any cost. And really, the way the markets interpreted that is that implied that the US Federal Reserve was actually prepared to continue to raise rates, even if that meant seeing the US market fall into recession. So markets have been constantly rattled by some of the messaging coming out from central banks, not only in the US, but here as well, in terms of the central banks, respective central banks' focus to bring inflation under control. So what's actually been interesting more recently is that despite the interest rate rises that we have seen, and particularly in the very sharp rises we've seen in the US, which are certainly higher than what we've experienced here in Australia, is that the US economy has actually been quite resilient. Unemployment rates in the US, and actually here as well, still remain at record low levels, and we're still seeing quite strong consumer spending, particularly in the US. And so one of the things that basically markets grapple with is what sort of landing are we going to have? And what I mean by that is, what is the economic landing going to be? What is going to be the trajectory of the economic outcome of these higher rates? So we talk about it in the context of, is there going to be a hard landing whereby we see the economy fall into a recession, a severe recession? Or is it going to be more of a soft landing whereby the economy avoids a recession, but we do see the economy slow quite dramatically? And there's now been a new phrase that's been coined more recently, which is, do we see actually no landing, whereby the economy actually remains quite resilient in terms of low unemployment and reasonably strong economic growth, despite these very steep and severe increases in interest rates. So the outcome of all this is that investor sentiment swings very sharply from one scenario to another. And really think about this in terms of a bull market scenario where there is an expectation or a belief that we'll see markets go up quite strongly versus a bear market, which means that we're going to see markets fall quite dramatically. And really what this has led to is an extremely volatile market, both in equities and bonds. Great example of this is what we saw play out in the local market, in the Australian stock market, in January of this year, of 2023, where we actually saw the ASX 200, so the local market, the local index, have its best start to a calendar year in over 20 years. But then we saw that turn around quite quickly in February as some of that positive sentiment we saw in January start to fade away, with a concern that rates would actually have to be higher for longer. In addition to the constant focus on interest rates and inflation, of course, we've seen the tragic events unfold in Ukraine, which have now been going for over a year. And unfortunately, it doesn't appear that really, as we sit here today, that there is any end in sight. This has also had severe implications for the global economy. I think we're all very familiar with the energy crisis that we've been experiencing now for quite some period of time, but also the impact on food. And it's worth remembering that the Ukraine and Russia account for just over 30% of the world's global wheat exports. There's also been an extreme disruption to the global supply chain as well. So again, things that are also impacting on the global economy. Throw into that we saw last year the very extreme lockdowns that China was imposing across the country, which had also massive impacts on the global supply chain in terms of leading to a shortage of goods and materials all around the world, which certainly had an impact on prices and hence an impact on inflation. And all of this really adds up to a situation where we've seen the strong tailwinds that we've enjoyed for a long period of time since the end of the global financial crisis in 2009 turn around into what is now experiencing extraordinarily strong headwinds. But I think it's really important that as we manage through periods of heightened volatility and weak equity markets, this is not new. The circumstances might be different, but we have experienced this before. So if we think about the global financial crisis of 2008, 2009, or going back further to the tech bubble of early 2000 in 2001, and then more recently, the onset of COVID in February, March of 2020, or if we want to go back even further to the stock market crash of October 1987. What we do need to keep in mind is that following all of these periods, all of these events, we did see markets rebound. We don't know when, but what we do know is that they do eventually rebound. So it's important to remember that despite the current challenging market conditions, it's critical to remain invested through the cycle. As I've said, and as you can see on the slide here, diversification is key. And when navigating through a period of heightened volatility, we have a very strong focus on ensuring that we maintain asset allocation shape. And while volatile market conditions and hysterical headlines can lead to investors becoming nervous, our view is that volatility can also lead to opportunities. So a great example of that is what we've seen actually play out in fixed interest markets over the course of the last 12 months. So as interest rates started to rise, we saw bond yields start to rise quite dramatically as well. And this has actually led for us for a buying opportunity. And so we have been increasing our bond exposure over the course of the last 12 months. It's again a reminder that the investment strategy is not set and forget. We are certainly long-term investors, and that's a very important part of our investment beliefs in terms of our DNA, but we are prepared to take advantage of opportunities as they arise. So increasing exposure to bonds is one example, or also taking advantage of rallies in equity markets. So, for example, the strong rally we saw in the Australian stock market in January of this year allowed us the opportunity to actually trim our position in Australian equities. Because we do believe that holding cash and having some cash in reserve during periods like this is very beneficial, as it allows us to take advantage of opportunities. And we do believe that being a patient investor will be rewarded in the long term. And so it's important not to react to the short-term noise that we are seeing in markets and ensure that we do adhere to our long-term investment discipline. It is worth touching on the issue of energy in a little bit more detail. So as we've talked about, the Ukraine war has had a big impact on global energy supplies. But there's also been a topic which we see headlines most days, certainly at the moment, around the energy transition. And the transition to being a fully reliant on renewable energy is not straightforward. The reality is that the energy supply from renewable energy today is not sufficiently developed to meet total energy needs in Australia. There is certainly a positive story with regards to the fact that lower carbon energy supplies are a more cost-effective and economical option going forward. But we are very conscious of how we transition or decarbonise our portfolio without disrupting key industries that both Australia and our export partners rely on. Decarbonising our portfolio tomorrow wouldn't solve the climate problem, and we do not believe would be in the best financial interests of our members. We believe also it's important to have a say in the management of how some of those high carbon assets are managed and how they transition over time. So we want to ensure, as we transition, we create opportunities and support for communities that will be most impacted by the energy transition. Our focus is as much on the decarbonisation of our existing assets as it is ensuring our portfolio is exposed to assets and companies that will drive the transition, and just as importantly, build resilient communities and economies for the future. So now I just want to turn to performance. Again, our strategy aims to deliver a consistent pattern of returns for our members over the long term. We are focused on ensuring that we provide robust downside protection when it's needed most, like now, plus also participating in the upside when markets are doing well. Performance to the end of December 2022 has delivered positive returns in all but one of the past 10 calendar years. And importantly, overall, we've delivered a return of 7.9% per annum over the past 10 years. There is no doubt that the past year has been challenging, but our diversified strategy has held up well against a backdrop of negative returns in both international equity markets and fixed interest markets. I did want to touch briefly on the performance of the Australian equity market because in a lot of ways, it's actually been a bit of an outlier to the really challenging market environment we've seen from equity markets all around the world. And so we've been a bit of an outlier. And here, just showing on the chart here, our performance versus the US market. And really it can be explained by the makeup of our market or the construction of our index, where we have a relatively large exposure to sectors as the resources sector, the energy sector, and the utility sector. And all of these sectors have actually delivered positive returns over the last 12 months as a result of the ongoing energy crisis. So just again, touching on longer term performance is in line with expectations. We've certainly delivered a positive result in terms of returns against the CPI plus 3% objective for the balanced growth option. And importantly as well, we've also delivered competitive returns versus peers over the long term. In fact, the performance of our balanced growth option sits in the top quartile of the survey, super rating survey, over 7, 10, and 15 years to the end of December. So to sum up, I think it's really, when we think about what we've experiencing and lived through, we need to remind ourselves that it's important to expect the unexpected in markets, but this is not new. And really, I think if anything, it's a reminder that the key ingredients of our investment strategy are critical in terms of building a robust investment strategy, and this has not changed. So diversification, as I've talked about, adherence to our long-term investment discipline, taking advantage of opportunities when they present, but not chasing short-term returns, remaining patient and not reacting to short-term noise. We believe that all of this will put us in good stead to navigate through these challenging and volatile market environments in terms of what we're currently experiencing, and deliver positive outcomes to all of you, our members, over the long term. And I'd just like to finish by saying that, look, if you have any queries specifically related to your investment choices, we offer a team of financial planners who can assist. Now I'll hand back to Danny for the Q&A.
Thank you very much, Andrew, and thanks, Scott. We're very grateful for the briefings that you've been able to provide to our members. It's really important we have this sort of opportunity to share what's been happening in the fund and what's been happening with investments over the last 12 months. But one thing we really look forward to in relation to this session is the opportunity to respond to specific questions from our membership base. But just before we start that, I wouldn't mind just extending a big thank you on your behalf to our dedicated team who, again, continue to work tirelessly throughout a year of disruption and volatility. we really take pride in looking after and caring for our people so that they can continue to care and serve for you. We couldn't achieve the goals without their great support. So throughout those challenges and all those that preceded, our people have continued to stay focused upon serving you, our members, with excellence in super, deliver with care, and we're enormously grateful to all the Equip team for doing that and the way in which they've done that going forward. So now we'll go back to the Q&A. So look, I thought what we'd start with, we've got a number of different questions here for our colleagues, and I thought we might just start. So thanks again for sending those out first. We might start with the first one, which I might pass to you, Scott, is from one of our members saying, when will the reduced pension payments be returned to the normal percentages?
Sure, Danny. So this was a change that the government announced as a result of the COVID-19 pandemic, and it was a temporary reduction in the minimum required pension payments. And the reduced required payment allows pension members to withdraw less money. So that the effect being that it maintains a higher pension balance, and that in turn better supports the retirement long term. And so there was an extension of the initiative, and that was extended in March 2022, so last year, and it's now currently planned to end on the 30th of June 2023. So then it returns to the levels that were in existence pre the COVID-19 pandemic measures.
Excellent. Thanks, Scott. Thanks for clearing that up, and thanks again to our member for the question. We've got another one here, which I think has got Andrew's written all over it. It's probably the shortest, sharpest question we've got this year, most direct. Hi, I want to invest. So, Andrew, I think perhaps you can respond for that.
Well, I guess that's what we do, isn't it, Danny? So, look, if you are looking for investment advice, our financial planners, as I said a little earlier, can assist you. So the best thing to do is to call our financial planning team on 1800 065 753 during business hours to book an appointment. And just to add here as well that the initial appointment is available at no cost, and there's no obligation on you to go ahead with obtaining financial services from us after that point.
Fantastic. Thank you very much, and thanks for the question. Another one here while we've got you here, Andrew. The question from a member about the volatility in investment markets. They're saying, is it going to settle down soon? I'm worried about the return that it's having and affecting my returns. So perhaps you might better respond to that.
Yeah, sure. Look, I think we'd all like to see volatility reduce. But again, as I talked about, I mean, volatility is a function of markets that we do see from time to time. And again, it's not really surprising when we think about the backdrop of record increases in interest rates, inflation at levels not seen for many decades, and the ongoing war in Ukraine. But again, it's really important not to react to the short-term noise. And as I said, of course, volatile markets can lead to opportunities, which is certainly what we've been aiming to do over the past 12 months. And most importantly, and again, this is a really important reminder for all of us, we are investing for the long term. And it really, it's a saying I use quite often, but it's time in markets, not timing markets, that counts. And we certainly do believe that being a patient investor will pay dividends in the long run.
Fantastic. Thank you very much. Another very topical question we've got concerns cyber security. And I know this has been an area that we've really focused on this year in particular. But could what have happened at Optus and Medibank happen here too from one of our members? How do I know that my money and my information is safe? So perhaps you might be able to respond to that, Scott.
Yeah, sure, Danny. And look, we certainly understand that this area is of interest and concern for our members, not just with superannuation, but with a whole bunch of other, sensitive data, financial information that you might have. And as Danny said, like a number of other organisations, we have continued to focus on this particular area to make sure that our cybersecurity systems, are certainly appropriate, because you do have sensitive information with us at times, and also we look after your retirement balances. We do have regular audits and tests to ensure our systems are working. We do have a designated team that looks after this particular area. And like I said, it's important that we don't just set and forget that we continually try and test against it. I think if you have specific concerns around the data breaches that Danny mentioned, the Optus and Medibank breaches that occurred last year, we can actually put a payment flag on your account, and that is an additional layer of precaution and protection in addition to our other measures. And what it does mean is that you have to personally approve any payment before we can release funds from your account. And although that might seem like an additional step, it is does give you that additional level of certainty. So you can discuss that with our helpline team. The number for that team is 1-800-682-626. I think there's also some other things that members can do in addition to what we're doing at the fund, and that will help protect not only your data and balances with us, but also you can potentially use these measures for other things as well. Certainly using multi-factor authentication is really important. Using strong passwords, again, is another layer of protection. I think be really wary of unexpected communications. I mean, we won't, for example, ever send you an email asking for your bank account details, etc. Update your devices regularly. And as I said, never provide personal details in response to unexpected communication. Certainly call us back on the channels that we've talked about to make sure it is actually us. But as I said before, we won't be asking you information like bank account details, etc. And so you can find more information about our privacy policy on the website. That website, equipsuper.com.au. And as I mentioned before, if you've got any specific questions about our information security measures, then certainly reach out to our helpline on 1-800-682-626.
Well, thanks, Scott. Terrific update there on the things that we've got in flight, but also things that we can do as individuals to make sure that we're enhancing our cyber security. So really important and good advice. So thanks very much for that answer. Next question we've received is concerns the number of investment options, and perhaps a question about whether we're going to would we be interested in producing a low-cost index fund or more ESG options going forward. So, Andrew, would you be able to respond to a member, please?
Yeah, sure. Look, very timely. We're always thinking about the range of options to offer members. And I'm actually very pleased to be able to share with you that we will be introducing or launching a new low-cost index diversified option on 1 July this year. The strategy at a high level will be 70% invested in growth assets, so things like equities, and 30% invested in defensive assets, so fixed income and cash. And importantly, it will be comprised of low-cost index strategies. And we think that will be a great complement to the existing option suite, and certainly appeal to all of those members who are looking for a low-cost option. We're also spending a lot of time on restructuring our sustainability option. And again, this will be updated and available to members from 1 July this year. It will be a diversified option. And what we're looking to do is to ensure that it's exposed to assets that will benefit from a more environmentally friendly and sustainable economy over the long term. The option will focus on climate resilient technologies and assets, and will include ESG screens and tilts. So I think that's it on that one.
That's fine. Thanks very much, Andrew. And look, from investment returns to another area of always great interest for our members, and certainly an area of focus for us, is about members' fees. From one of our members here, what about reducing fees for members? Scott, would you be able to update our members, please?
Yeah, sure, Danny. I mean, we certainly do understand that it's about net returns, and so obviously that's the gross returns less the fees. And as a profit to member fund, we certainly do try and keep our fees as low as possible. While continuing to invest in the service offering, regulatory requirements, etc., and also delivering strong long-term returns. But as I said, as a profit to member fund, you can rest assured that everything we do, goes back to you as the member. Over the last year, we have reduced our pension fees, and in 2023, as a result of the One Fund initiative, we will look to reduce our administration fees for most members. So again, we'll be communicating that in due course.
Fantastic. Thanks very much, Scott, for responding to that question. Another one has come in from one of our members. Want to know who Equip made donations to during this financial year. Also where can I find out that information? So would you be able to answer that question for our member, please?
Sure, Danny. I mean, firstly, our fund doesn't actually make any charitable or political donations, so I think that's really important to note. But we do provide details of our financial statements on our website. That does include our current financial position, payments and our cash flow. And so that for the year 30 June 22 is on the website. And there's also a shortened version of our financial statements in our 30 June 22 annual report.
Excellent. Thanks for clearing that up. You often hear information reports about donations from profit to member funds. It's very clear what the Equip position is. So look, I've got one or two other questions have just come through. I've heard one of the particular questions, very topical as well. The government is looking to increase tax on super contributions. So looking whether we can explain or make any commentary in relation to that.
Sure, Danny. So there has been some announced changes in respect of the concessional cap for balances over $3 million. The impact of that, if the changes went through as announced, is that they would be subject to a higher rate of earnings on that excess at 30%. I think it's important to understand that change does impact probably a really small percentage of the Australian population, probably somewhere under 1%. But no doubt it will. It's something for those members with that sort of balance that they'll need to be aware of. But again, it's important to note that that announcement is a government announcement. It hasn't gone through the Parliament yet, and it does apply, I think, from 2025 is the current prediction.
And it does seem that the only certainty of superannuation regulation is the continued change.
I think that's right.
We'll keep our members updated as that emerges. We're getting close to time here, but I've got another, I think, particularly important question that's come through about what our fund is doing in relation to the energy transition. Now, Andrew's started to address that, but I wouldn't mind just seeing, Andrew, whether we can unpack this a bit more. I think it's also important we're very clear, as Andrew pointed out, about what our investment beliefs are. And we made it very clear about our values. We do what we say we're going to do. So would you be able to perhaps unpack it just a little bit more for our members on that?
Sure. Thanks, Danny. Look, and again, as we discussed earlier, the energy transition, look, it's not linear. It's not a straight line. There isn't sort of, one size fits all. So I guess in terms of, how we're approaching it, it's really sort of three-pronged in terms of what we're looking to do. And that's firstly working with our investment managers. And what we're looking for there is how they're integrating issues such as the energy transition, climate change, environmental and social factors into their decision making. We're also looking to, as I talked about earlier, invest in some of these new technologies, which we think will provide part of the solution, if you like, in terms of moving to effectively a transition where energy supplies are sourced from renewable energy. And also, though, as part of that, it's how we actually engage and partner with other like-minded investors and organisations in terms of how we actually navigate through this transition in looking to meet our commitment to net zero by 2050, but importantly, in a way that doesn't what's the best way to put it? It doesn't have a dramatic impact or a severe impact on society and those affected communities and industries as well. So it's a real balancing act, and it's something that we continue to manage every day in terms of navigating a path forward.
Excellent. Thank you very much, Andrew. It's certainly important. Our investment beliefs are real, our commitment to values are real, and as Andrew's outlined, we're taking specific action in a very measured way in our members' best financial interests. Got just time for one other quick question. We might just comment on crypto. It was very topical last time we came together, Andrew. Perhaps you might like to update a question for our member, which is, do we invest in crypto? If not, why not?
Yeah, I think it's a question that we also received last time as well. So it is topical. It remains topical. In short, we do not invest in cryptocurrencies. Certainly, for us, in terms of any investment that we're looking to make, we want to actually understand the risk characteristics of that investment. We also want to understand what's going to actually generate the return. And when we look at crypto, it's very different to actually understand what's driving the value of that investment. There's certainly no doubt that some of the technology behind crypto is certainly very interesting and potentially appealing. But when we think about crypto and the fact that there's no regulatory backdrop for it, it's certainly not an area that we are yet to invest in. And I dare say it might be a little bit of time before we do. Danny?
Thank you very much, Andrew and Scott, for answering those questions. Look, it's now time for me to close our meeting. We do want to respect your time and keep it very much to time. But before I do, I just want to reiterate that we as a fund are here to help our members grow their super, to plan for their future, and to have the best retirement outcome possible. We never lose sight of having the member in the room in all our decision making. And we aim to deliver strong long-term investment returns while keeping our fees as low as possible. We also look to deliver great service, a wonderful member experience, and advice you can trust. So we want to thank you for giving us the opportunity. It's a privilege to serve you. It's a privilege to be looking after your retirement savings both now and in the future. And as I mentioned earlier, the minutes of this meeting and the written response to your questions, including those many that we didn't get a chance to get to today, will be available on the Equip Super website in April. If you have any questions about today's meeting or about your super, then please call our helpline, 1-800-682-626. And we're open between 8 a.m. and 8 p.m. Australian Eastern, Monday to Friday. So that number, one more time, is 1-800-682-626. So look, that concludes our third annual members meeting. I'm delighted to be chairing it today. Even more pleased that we've managed to pack it all in, the update, and finish it right on time. So on behalf of the board, the management team, my colleagues here, Scott and Andrew, who've been presenting with me today, I thank you for your time. It is a pleasure and a privilege to serve such an engaged and loyal membership base. I hope you have a wonderful rest of the day. Take care.